Good afternoon. My name is Jennifer Wistrand, and I'm the Deputy Director of the Kennan Institute. Thank you for joining us for a discussion of punishing Putin inside the global economic war to bring down Russia. Before I introduce our guests, I'd like to encourage you to stay up to date on the Kennan Institute's work by visiting our website and signing up for our recently launched newsletter, which includes links to our events, such as today's, our blogs, our podcasts, and our other items of interest. So today's guests, two very esteemed guests, I couldn't be happier to have these two discussing this topic today, are Jim Mullinex and Stephanie Baker. Jim Mullinex is a senior Foreign Service officer with over 30 years of experience working to advance U.S. economic prosperity and foreign policy interests. He's currently a diplomatic fellow at the Wilson Center, where he's researching the use of economic coercion by totalitarian states and pathways to resilience. Jim has spent the majority of his diplomatic career in Asia, serving multiple tours in the Philippines and Indonesia, Taiwan, Hong Kong, and mainland China. Most recently as the U.S. Consul General in Chengdu. From 2021 to 2024, he served as the Director of the Office of Sanctions Policy and Implementation in the Economic and Business Affairs Bureau, where he led a team of almost 100 Foreign Service officers, civil servants, and contractors, working on sanctions targeting, policy, and implementation, as senior advisor to the sanctions coordinator, responsible for providing strategic guidance on sanctions issues related to Russia and Eastern Europe. Our other guest is Stephanie Baker, the author of the book that is the topic of today's discussion. She's a veteran journalist who began her career reporting from Moscow in the 1990s. Her work has been recognized by the Gerald Loeb Awards, the Overseas Press Club, the UK Society of Editors, the Society for Advancing Business Editing and Writing, and the UK's Foreign Press Association. She's a fixture across all Bloomberg media, including Bloomberg Television, radio, and podcasts. And she's appeared on MSNBC, CNBC, NPR, PBS, Sky News, and the BBC. So after our guests speak, there's going to be a question and answer period. Please submit your questions via the Q&A function at the base of your Zoom screen, and please include your name and affiliation when doing so. Finally, today's discussion is being recorded. And so with that, Jim, I will turn it over to you.
Great. Thank you so much, Jennifer. And let me just say it's really a pleasure to be here and be able to host this fireside chat with my good friend Stephanie Baker, who has written an incredible book entitled Punishing Putin. And today we're going to have a very good discussion of how she came to write this book, how we have, as the U.S. and other Western countries, approached Russia and our sanctions policies over the last several years. So let me just start by welcoming you, Stephanie, and saying, our Russia's invasion of Ukraine in 2022 unleashed really an unprecedented response from the United States, but also from many countries, including the UK, the countries of the European Union, Japan, Australia, Canada, and many other allies and partners from around the globe. But of course, the invasion in 2022 was not by any means the start of the story. And your book is, I think, a tremendous contribution to the literature on Russia, because it really goes back and it's a retrospective of the past 25 years of the West's effort to try to deal with, to manage, and finally to oppose Putin and his vision of Russia in the 21st century. Can you tell us a little bit about how you came to write this book, and why, given your vast experience in Russia and writing about events in Russia and the Russian economy, you chose to frame it around sanctions?
Yeah, thanks for having me. It's great to be here. As soon as I saw tanks rolling towards Kiev, I knew immediately that this was the end of an era. And I wrote a piece to that effect with that title, less than a week after the invasion for Bloomberg Business Week, because I just realized that this time of this hopeful period that we had, albeit I think misplaced optimism that we had about Russia, that it would eventually transition to some kind of democracy, free market economy, that it would be part of the group of, rule-based nations. I think that I saw that as immediately over. And I had reported on sanctions off and on for a few years, but I really saw the 2022 sanctions as an interesting angle to take, because as the months wore on, it became pretty clear to me that the sanctions were a grand experiment, because we just didn't know how this was all going to play out. We've never had the G7 come together to impose sanctions on an economy as large as Russia, or an economy as integrated as Russia's was in the global financial system. And I did see it as a new type of economic warfare, or economic warfare used in a very different setting. It was obviously one of the few ways that the West could respond to a nuclear power invading its sovereign neighbor. And I could see that there were many books about the war, but none of them took the economic angle. And that was where I really had experience from working as a young reporter in Russia in the 90s, when I covered the Russian economy, the transition, the central bank, as well as the economic crisis of 1998. So I saw a lot of the Western companies coming into Russia. And so when I saw them, many of them leaving, I just thought it was quite a dramatic story to tell, that there was, hundreds of billions of dollars being frozen, companies writing down huge amounts of money that they'd spent years trying to, on investments they'd spent years trying to build up. And I also realized I had a lot of reporting that I could draw on. But I'd also spent time in Ukraine in the run up to the 2022 invasion. So, the invasion was very, it kind of hit home to me. I knew Ukraine quite well. And what I wanted to do was write about a complicated, wonky topic in a way that was accessible to a wide audience. So it was a kind of challenge in explanatory journalism. And it required me to be on top of a vast array of things, from oil markets to export controls to Justice Department indictments and the like. And I thought I could explain those things to a wider audience in a way that hadn't been done before.
Yeah, I mean, certainly, I think there's a great deal has been written already about the war in Ukraine, and about the events that are taking place on the ground. But I agree with you fully that the economic approach to explaining the response to this invasion is an area where there could be a lot more detail, and your book has certainly contributed to that. I'd like to go back a little bit to the years before the 2022 invasion. Obviously, sanctions have been in place against Russia for quite some time, from their initial invasion of Crimea in 2014. And I'd be curious to hear your thoughts about, and you go into this in some detail in your book as well. I'm curious to hear your thoughts about what the sanctions response in 2014 looked like, and why do you think that the Obama era executive orders related to the Russian invasion and the sham election in Crimea were not effective in sort of changing Russia's calculus, or do you think they might have been effective in changing Russia's calculus in that 2014 invasion?
Yeah, I mean, I go into that in the book by talking to some of the people that were involved in the U.S. response in particular. And I think the 2014 sanctions were really pinprick sanctions that, as you said, didn't really affect Putin's calculus. I think one of the big problems was that Europe wasn't really on board or ready to adopt a more hard-hitting response to Putin's annexation of Crimea. And as a result, and I go into that in the book, the U.S. Treasury developed some new sanctions tools that hadn't been tried before, like limiting the ability of Russian companies, major Russian companies, to raise money on debt and equity markets. And the aim there was really to sort of gum up the country's financial plumbing and make it more fragile. And I mean, it worked to some extent. They did have some impact But at the same time, at the end of 2014, beginning 2015, global oil prices fell, and the two worked kind of together to create a sort of mini financial crisis, currency crisis in Russia. But they weren't really expansive enough to really change Putin's thinking. I think one of the reasons why, Putin didn't go further back then was because I don't think the Russian military was ready for a full-scale invasion. I think the 2014 annexation was a reaction to the Maidan Revolution and the ouster of Viktor Yanukovych, the pro-Ukrainian Russian leader. But I do think you're posing an interesting question, which I try to get to in the book. It's a hypothetical. We'll never know the answer. But if the G7 had responded in 2014 more forcefully, the way it responded in 2022, would we be here right now? Would Putin have been able to launch his full-scale invasion? And I think that's a difficult question to answer. We've seen the way Putin has tried to get around the sanctions this time. But I do think the sort of limited sanctions in 2014 was sending a message to Putin that if he went further, he would see a similarly calibrated, limited response, which didn't turn out to be the case. I don't think the sanctions in 2022 went quite as far as I think they could have, but they certainly went further than what Putin was expecting.
I mean, it strikes me that, the use of sort of pinprick sanctions, as you called them in 2014, targeting people maybe perhaps close to Putin or some of his partners or cronies, and then imposing some types of restrictions on the financial and energy sector's ability to raise debt, sent a very clear signal to the regime that sanctions are very much in play and are a tool that the West is going to consider using. And certainly in the years following 2014, there were a few initiatives on the U.S. side, including updates to some of the different sanctions, expanding the scope of the 2014 measures, and then of course CATSA,
Right.
which is the congressionally mandated sanctions regime, that looks at the Russian military and requires certain types of measures to be taken in response. Would you say that Russia was prepared for Western sanctions in 2022, given that we had been sort of, I would say, I won't say tipping our hand necessarily, but that we were using sanctions in a very active way, or a somewhat active way during that period?
Yeah, I mean, there were clear efforts to sanction-proof the Russian economy, and notably, particularly after CATSA, as you say, in 2018, Russia dramatically reduced its holdings of dollars, the central bank's holding of dollars, and moved a lot of those reserves into euros. And I think that does look to me, it does appear to me that this was a conscious effort to ensure that should any future sanctions come down from Washington, that Russia would be insulated. I think he was betting that Europe would be too divided to act, just as it was in 2014. And to some degree, we've seen that play out with the debate over whether or not to seize Russia's central bank reserves that were frozen in the immediate aftermath of the invasion, that there's been too much division in Europe to go the next step and actually confiscate that money. So there were other steps that Russia took in terms of payment processing, steps to mitigate the withdrawal of Visa and MasterCard. I think that helped to stabilize the internal Russian payment system in the wake of the sanctions and the departure of Visa and MasterCard. So there were many steps that were taken, but obviously the sanctions in 2022 went beyond what he was expecting. I don't think he was expecting the freezing of this huge $300 billion pot of money.
And so, as we get to 2021, late 2021, it's very clear that Putin has his eyes on Ukraine. We're hearing intelligence reports and eyewitness accounts, if you will, of troops massing on the border and such. Why do you think Putin decided to make that play in 2022? Do you think that there was anything that the U.S. could have done prior to the invasion that might have dissuaded him from further invading Ukraine at that time?
Yeah, it's a really good question. It's probably going to be it's going to be debated for years. Historians will be poring over that one. And I think we'll never know for sure unless there's a change in the Kremlin and there's, records that, get released. But, there were some reports that he decided to go ahead after Ukraine confiscated the assets of belonging to one of his close friends, Viktor Medvedchuk, in Ukraine in February 2021. Ukraine then put Medvedchuk under house arrest. I'm not sure how important that was to his decision making. It was, perhaps a factor. And of course, there was Putin's essay in July of that year that talked about, how Ukraine didn't exist as an independent entity. There were clearly some people within Putin's inner circle, like Yuri Kovalchuk, who is often referred to as the Rupert Murdoch of Russia, who played a key role in persuading Putin to invade. And I think that again, there was probably a thinking that the EU would be too divided to respond, that the US, the Biden administration was still recovering from the disastrous withdrawal from Afghanistan. And that his then defense minister, Sergei Shoigu, had convinced him that it would be over very quickly. I think there was certainly an eye on, within Russia on divvying up Ukrainian assets. I think that was one of the motivating factors. But, I think there's this debate about whether or not, which I get into a little bit in the book, about whether or not sanctions ahead of the February 2022 invasion would have had a deterrent effect, rather than what actually happened, which was, a rollout of a lot of the most tough penalties after the invasion had begun. It does seem to me that Putin was intent on invading, and that it would have been very difficult to use sanctions to head that off. Whether or not there could have been diplomatic overtures, I know that there were some, and that they didn't work. Ultimately, Putin wanted guarantees that Ukraine would never join NATO, and that was not something that anyone, in the West was prepared to give him. And I think that was, the fundamental gap that couldn't have been filled through any kind of diplomatic overtures.
Yeah, I mean, and I'll just add that I think, one of the challenges of implementing sanctions ahead of what was expected to be a very serious military attack was just the sense that we didn't, maybe we weren't sure if we had the authorities in place necessary to implement sanctions in advance of actions that had not yet taken place, right? And so using that as a way to, using those conversations, you said, the diplomatic outreach, that I think was pretty well reported on, to try to convince Putin that the costs would be substantial if he were to actually go ahead and further invade Ukraine, was I think the objective of the administration at that time, rather than to preempt by issuing sanctions and then perhaps removing an obstacle or creating conditions that would encourage him to take further action. So a really interesting dilemma. When's the right time to implement sanctions? Do you need to respond? Do you need to wait for an action to happen and then use sanctions as a response, or is there a way for us to use sanctions or other types of sort of hard economic diplomacy tools to make it to impose costs before actions actually happen? And that's that's an ongoing debate, right?
Right, and you can't obviously spell out what you're going to do, because then the Russians will adapt and move money around, et cetera.
Yeah, exactly.
Yeah.
So, when I think about the measures that the United States and others have taken against Russia in response to their further invasion of Ukraine. I put them into a number of different, baskets. Those meant to identify and hold responsible individuals who conducted or who were engaged in human rights abuses, or who were responsible for planning and implementing Russia's aggression in Ukraine. Other measures that are designed to impose costs on those who are helping Russia to finance its war, or make it more difficult for Russia to finance its war. Others to disrupt Russia's ability to produce certain types of goods or military type of materiel. And those meant to disrupt or discourage evasion of our sanctions as well. Would you, as you look at sort of the different types of sanctions that have been imposed in this particular case, which ones would you categorize as more effective, and why do you think that is?
I think the sort of financial sanctions have been probably the most effective. Everything from the freezing of the central bank reserves, and the exclusion or the kicking out of a huge swathe of the Russian banking system out of SWIFT. I think that was quite destabilizing, and it did have a huge impact. I think, the whole issue of sort of what Russia needs for its defense industry, which is something I continue to report on after I finished the book. Obviously, I think the US did a really good job in terms of building an export control coalition, but I don't think that there was enough pressure put on companies, US companies, European companies producing microelectronics that the Russian defense industry needed for its precision-guided weapons, that there wasn't enough pressure put on them to really vet their supply chains. And, it's all there for everyone to see that, Russian trade data shows the volume of US semiconductors that was being sold to Russia, albeit through Hong Kong and China, through third, intermediaries. But, those sophisticated technology companies kept saying there's nothing that they can do given the complicated nature of global supply chains. And I think obviously this is where a relatively small sanctions coalition, unlike previous sanctions regimes against, North Korea, Cuba, what have you, there were UN sanctions. This was a relatively small coalition, and that I think undermined the effectiveness of those measures, because so much got in through so much was getting smuggled in through what some people called the Eurasian roundabout, this trade highway through Central Asia and the Caucasus, China, Hong Kong, UAE, that it was very hard to stop that trade and really enforce those controls, which were probably one of the most important pieces of the economic war, to really hamper Putin's ability to continue producing weaponry to keep the war going. So, yeah, I mean, I think the financial sanctions were probably the most successful of that whole basket that you just outlined. Obviously, they did a good job in terms of sanctioning a lot of individuals that were involved in the war or involved in corruption of one kind or another. But I think in some cases they were too slow to go after relatively obvious figures. I think there's still some figures that they could easily sanction and haven't, and I'm curious as to why. I mean, one particular figure that comes out is that I've been monitoring. Is last I checked, the agricultural minister, Dmitry Patrushev. He's the son of Nikolai Patrushev, the former head of the FSB and the Security Council. His son was promoted to deputy prime minister. He's one of these sort of princelings, the Nepo babies, he's the next generation that he's even been, mentioned as a potential successor to Putin. And at last I checked, the US still had not sanctioned him. So, this is perhaps something that you probably know more about in decisions like that, why someone like that somehow doesn't get targeted, rather, who seems to be obvious and very close to the inner circle of power in Moscow.
Yeah, I mean, it's a really interesting question. One of the things that I took from your book was just how important the attempts to sanction oligarchs and cronies have been in the West's general approach towards Russia and trying to influence Putin to change his behavior or choose a different course. As we look at the sanctions against the oligarchs, I would say that in my assessment, those sanctions have been less effective than some of the others that we've discussed, the financial sector sanctions, for example, as well. Why don't you think more oligarchs, after having been sanctioned, why haven't more oligarchs sort of turned against Putin or tried to distance themselves further from Putin? And do you see any positive impacts from the sanctioning of these oligarchs who are close to Putin or who've made their fortunes under his regime?
Yeah, it's a really great question. And, I do devote some of the book to it because there was just such rich material that I could draw on, both from Justice Department indictments and, they were just interesting stories to be able to tell. I mean, I do think the big challenge with Russia is that fundamentally it's a mafia state where everyone, or the elite at least, has been co-opted or compromised. So even though there were some so-called oligarchs that were against the war at the beginning, they were very reluctant to come out publicly against the war for fear of losing their fortune. So, part of it comes down to greed. I also think that there was probably a fear that if they broke with Putin over this, that they themselves, the Putin security apparatus, could target them in the West. We've seen that happen with other Russians that have broken with the Kremlin. Litvinenko and Sergei Skripal are just the two most famous examples of that. But from my reporting, it seems like even those who were maybe against the war at the beginning now have shifted and have benefited or participated in the war in one way or another, because Russia's economy is so much on a war footing, it's impossible to avoid. So I think that they don't want to see Russia lose this war and suffer that humiliation. I think that the nationalism and the propaganda has worked quite effectively. But I think the positive aspect of it, I don't think that the sanctions were a good way to sort of split the elite, but I think the positive aspect of it is that it has dealt a major blow to Russian money laundering and illicit finance channeled through Western financial institutions, which is something I'd spent a lot of time covering and reporting on in the run-up to the invasion. I'm not saying that it's completely, fixed and there's no Russian illicit money or, sanctioned funds, still in Western financial institutions, but we're in a very, very different place than we were in 2022. So I think that is a positive sign. That's a positive outcome.
Yeah, that's a really interesting point, and I would really certainly share your assessment that in the UK in particular, but in other places around the world, the risk of dealing in oligarch money has become much more obvious and apparent, and sanctions imposed against certain individuals or entities in well-known jurisdictions or jurisdictions that have formerly been well known for handling sort of illicit accounts or accounts held by oligarchs and their cronies have started to take a very different view of that money. And you referenced some of that in your book as well, particularly with respect to sanctions evasion in Cyprus and other places. You mentioned also the importance of enforcement. And so I'd like to, if you don't mind, I'd like to pull on that thread just a little bit. You know, the the various measures that have been imposed over the past now 3 years, almost coming up on 3 year anniversary now, um, have, I think, often had an initial impact that has sort of faded a bit over time, as is often the case in sanctions, as people look for ways to get around them. Could you speak a little bit about the importance of the enforcement efforts, both in the United States and in other places, in how you see those progressing?
Yeah, I mean, it's probably the most important question because, the sanctions are meaningless without proper enforcement. And, on the one hand, you saw the Justice Department take a pretty tough line on trying to enforce a lot of the US sanctions, particularly those against those individuals that were sanctioned in 2018 because they had 4 years of evidence to go over and use as to build any particular case. I mean, I think that the problem in 2022 is that so many sanctions were rolled out, that the difficulty of enforcing them really became apparent, in things like export controls, the export of luxury goods, the oil price cap, which we haven't talked about, but that was another big one. I mean, I do say in the book that oil is the key to the Russian economy, and it has been for decades. And that I go into the oil price cap in pretty in depth, just because it's such an interesting idea that had never been tried before. And despite this creative piece of policymaking, I didn't think that there was a proper enforcement mechanism as part of it. And, it seemed to me that maybe that was almost on purpose because the whole idea of the price cap was to keep energy markets stable, keep Russian oil flowing, but try to cap or drive down Putin's revenues. I mean, oil and gas sales make up roughly 30% of the Russian budget, so it's absolutely essential. And as part of that oil price cap, they were relying on attestations, basically pieces of paper going back and forth saying, yes, this oil was sold below the price cap of $60 a barrel. But it seemed like no one was really checking. And there was no, and the OFAC, as the Treasury sanctions arm, doesn't really have the staff to monitor and enforce these sanctions. If you look, and I looked at this as part of the book, that their enforcement actions were relatively small fines, not that many per year. And, it goes back to the overall, I wouldn't say problem, but maybe it's both a strength and a weakness of sanctions is they rely on the private sector to enforce them. And, banks have been very, perhaps even overly cautious on enforcing sanctions. They don't want to touch anything because they've been hit by these huge fines for previous sanctions evasions against Iran, et cetera. But we haven't seen that with other sectors, say the US semiconductor industry, or say maritime insurance, the maritime insurance sector. No one's been hit with mega fines that would really scare them into enforcing these sanctions on behalf of the US government.
Yeah, I mean, it's a really great point, and you've touched on a couple of, I think, essential pieces of the sanctions strategy and enforcement strategy. When you talk about semiconductors on one hand, and also oil on the other. Maybe just sticking on oil for just a second. As you noted, the oil price cap, I think, was a really innovative approach towards getting at one of Putin's key sources of revenue without disrupting global markets, at least to the extent possible. The enforcement efforts, I think, have been, it's been challenging. The enforcement probably has been challenging, but there have been some measures over the past year or so, including just in the last month, that I think have been helpful in making it more difficult for Russia to profit from its oil exports at, especially when they're at prices above the oil price cap. But the imposition of oil price cap has also created a fundamental realignment of the industry in a certain way, with the the growth of the black fleet or the gray fleet or whatever you like to call it. Have you thought a little bit about what the U.S. or what the U.S. and Europe and other members of the oil price cap coalition could have done better to help the oil price cap to have a larger impact on Russia's ability to sell its oil?
Yeah, I mean, the problem that the oil price cap worked, when it was instituted at the end of 2022, it did work for a few months, but then Russia assembled its shadow fleet of these old oil tankers that they bought mostly off of Greek shipping tycoons. And one person I spoke to, involved in the EU said, yeah, that was our big mistake. What we should have done is banned the sale of these old ships to any entity tied to Russia, which I think they've taken steps to do that, restrict those abilities, some of those sales recently. So what you saw 10 days before Trump's inauguration, the Biden administration rolled out these sweeping sanctions against Russian oil, including targeting 2 major oil producers and more than 180 vessels, some of which were part of the shadow fleet. I was expecting a move like that. I thought it would come sooner than 10 days before Trump's inauguration, and I think it could have come sooner. I mean, the argument from the Biden administration is they felt like they could act when they did because the capacity in the oil markets was such that it wasn't going to have a blowback effect on U.S. gasoline prices. And obviously there was probably reluctance to do that before the U.S. presidential election because, the election was so sensitive to inflation and cost of living issues. But they could have taken more aggressive action earlier against the shadow fleet. I mean, they could go even further if they wanted to. But again, I think this has been the self-limiting factor with sanctions is that they didn't want to take steps that would harm the US economy or the European economy more than it would harm Russia's economy. And because Russia is such a major oil exporter, we're caught in a bind. We can't take action against one of Russia's key sources of revenue without causing economic pain at home. And I think that's been the enduring dilemma of sanctions. I've seen other people float ideas of, well, why don't we get the Saudis to unlock more of their capacity, enable them to regain market share and cut out more Russian oil. Maybe that will happen. I don't know, but it's really the central question of facing, I think, Western policymakers, and if they really want to deny Russia the means to continue to finance the war, they've got to get at the oil revenues.
Yeah. It's interesting that President Trump has, in recent days, also made similar kinds of comments about seeking to encourage OPEC or Saudi Arabia to pump more oil and to bring the price of oil down, and in part to squeeze revenues away from Russia. And we'll have to wait and see whether or not that really happens the way he suggested he might be interested in pursuing it. So recently I was at an Atlantic Council event where former Deputy National Security Advisor Dalip Singh spoke about the future use of economic statecraft tools and offered a few rules that he thought would be helpful in guiding their use. Things like the need for a very clear objective for the use of sanctions and a regular review of the impact, basing sanctions on clear analysis of what you expect to achieve and efforts to try to mitigate unexpected consequences. And finally, not least at all, maximum coordination with partners and allies who have similar types of authorities. As we look at Russia sanctions over the past few years, how would you evaluate them, looking at them through that framework that Dalip Singh offered? Are there other things that maybe we should think about as we think through the use of sanctions? Are there other metrics or benchmarks that we might use in order to make our sanctions and other types of economic statecraft tools more effective?
Yeah, I think he was right in the sense that there was an incredible amount of coordination among G7 countries, that the G7 really did become much more than a talking shop. That, and I had this from various other people that I spoke to for the book, that there was just a level of trust and openness amongst those G7 Sherpas in particular that coordinated the sanctions. I don't think there were the Russia sanctions, at least, I don't think that it was clearly articulated at the outset. And when I sat down to write the book, it was one of the hardest things to do. I was looking at various statements of different policymakers, trying to sort of summarize what the objective was. And it was very difficult because it changed over time. It was unclear whether or not it was about behavior change. Was it about punishment? Was it just a messaging exercise? And I think there were some overly optimistic pronouncements early on that the sanctions that were adopted within the first month would cause the Russian economy to collapse, as if that was the objective. And so I don't think that could have been much clearer. I think it eventually did land on the objective of trying to degrade Putin's ability to continue the war and continue to finance the war. So, I mean, on the other things, I I think the sanctions probably have been flexible enough to deal with unexpected impacts, and in some ways maybe they were too flexible. You just the example that they finally imposed sanctions on Gazprom Bank in November, and that caused the ruble to slide quite a bit, I think more than 10%. But then they turned around and gave licenses to Hungary and Slovakia to continue using Gazprom Bank. So, in some ways, that they undermined the very sanctions, the impact of the very sanctions they imposed. It doesn't seem, from my read, that there has been like a rigorous review of the impacts. I know that the U.S. Treasury hired a sanctions economist with a view towards doing that, and there clearly was some economic analysis along with that. But I think as Dilip said in that Atlantic Council session, the computers from Treasury are from like the 1970s. So how sophisticated that kind of economic analysis was is unclear to me.
Yeah, fair point. I mean, I think one of the things that Treasury did come out with now several years ago was a sanctions reform package or process proposal, and many of the things that Dilip mentioned in his remarks at the Atlantic Council, I think were very much front and center in that discussion, the public document, looking at how we can better implement sanctions, how we can better monitor the impacts, the importance of finding ways to mitigate the impacts on vulnerable populations that are not the target of our sanctions. I will say that, I think, in many of the things that we did, including the sanctions on the financial sector, one of the key things that the Biden administration wanted to do was ensure that energy, foodstuffs, medical supplies, those kinds of things were not disrupted in any meaningful way. And there was a tremendous amount of energy and effort went into trying to negotiate things like the Black Sea corridor for grain exports from Ukraine, to ensure that medical supplies were able to be traded freely, those kinds of things. Which, I guess one could ask the question whether or not that type of mitigation work undermines the effectiveness of our sanctions as well. But I think for the need to ensure that there continues to be global support for the efforts that we are taking to hold Russia accountable, we need to ensure that those who are not directly targeted by our sanctions are spared the worst effects, especially in some of these humanitarian areas.
Absolutely.
Sure. Yeah.
Absolutely.
President Trump has repeatedly, since the campaign and after his election, has repeatedly said that he's eager to start negotiations and bring Russia and Ukraine together for a negotiated settlement to the war. While the sanctions, as you noted, have clearly affected Russia's economy, they haven't caused it to crash by any stretch. You know, so far we haven't seen any real eagerness on the part of Putin and his regime to come to the negotiating table over Ukraine. Are there things that we can still do with our sanctions policy that could help to encourage Putin to come to the negotiating table, either offensively or in some cases maybe defensively?
Well, again, going back to the question of oil, I mean, I think actually Trump has an opportunity to expand the sanctions to really increase the leverage that Ukraine has at the negotiating table. And I think particularly on Russian oil. I mean, if you look at the Russian economy, it's facing inflation, 9.5%, interest rates are at 21%, facing an acute labor shortage. There's been talk amongst business leaders of bankruptcies across shopping malls, agricultural sector, auto dealerships, so there is real pain being felt in the Russian economy, and there's pressure on Putin. So, I think an expansion of the sanctions, perhaps in targeting more vessels, targeting more Russian oil producers could have a real effect. And if you look at what's happened, since the war started, Russia has drawn down its national well-being fund, its sort of sovereign wealth fund, by about the liquid portion of it, they've drawn down about 60%. And if Russia's oil revenues drop another 10 to $20 a barrel, he could run out of that liquid portion of the national wealth fund within like 12 to 18 months is my Bloomberg economist calculations on that. So, rushing into a deal short term may not be the wisest choice. Waiting it out and increasing sanctions could probably, make the negotiations go more smoothly. How to mitigate the global economic consequences of that is another question. But I think they could go harder in order to get a better deal. Because I think Putin wants some sanctions relief. I think ultimately he wants the sanctions relief to be able to regroup and rearm. He's in a difficult situation because the economy is so warped by military spending that he's got to keep this going, because trying to stop the military spending is going to put the economy in an even more perilous position. He's expanded these kind of a bunch of defense enterprises that were relatively bankrupt before, and that is what is keeping Russia going, but he can't keep it going forever. So I think another year with tougher sanctions would put Ukraine in a much stronger position.
Yeah, I mean, right now China and India are taking the vast majority of Russian oil, and India, of course, has never had, prior to the war, not been a major consumer of Russian oil, but now is importing quite a large percentage, and China taking up most of the rest of it. Do you see any scope for President Trump to engage with Chinese and Indian leaders to come to some sort of agreement to press Putin for a return to the negotiating table and hopefully a real settlement?
Absolutely. And what we've seen from Trump so far, he's willing to, use brinkmanship in a way that we've not seen in a long time. Whether or not China would be willing to play ball after, he's imposed tariffs on China, I think that's going to be a difficult one to get China on side. India might be another question. As you say, they're like 35 to 40% of India's oil imports now come from Russia, and we'll really know the impact of the Biden administration's latest sanctions at the end of February, when the deadline passes for, when they're allowed to accept Russian oil. I mean, we already see a lot of Russian oil kind of, some tankers idling. So we don't really know what the impact of that's going to be after the end of February. That could have quite a major impact on Russia's revenues. So, and the degree to which India decides to accept a sanctioned tanker, I don't know. It depends on their appetite, and that could depend on the signaling from the Trump administration as to whether or not they might use secondary sanctions to go after, Indian refineries or Indian financial institutions that are facilitating that.
Yeah, certainly I will say that our experience has been thus far that both India and China have been not perfectly, but generally hesitant about engaging with sanctioned entities for fear of bringing secondary sanctions down on their own companies or their own entities in their own country. So that's something again that we'll have to stay tuned for to see how this administration chooses to engage on this particular issue and where we can go. We've been talking for about 50 minutes or so now. I wonder, Jennifer, if we have any questions from the audience that we might be able to throw Stephanie's way.
No, absolutely. We have gotten some great questions. So to our audience members, if you still have questions, you can send some in. We've got about 10, 12 minutes we can take questions. And they're great questions. And as everyone's heard from the discussion, I mean, Stephanie's book is just so comprehensive in what it covers.
Mm-hmm.
So I'm going to try and pick out a couple questions that maybe build on some of the comments you already gave. Here's one. It says it's from Jennifer Brush, former OSCE ambassador to Moldova. Does your book cover the sanctions effect on the general population? Has average family income decreased, unemployment gone up, crime risen, average lifespan decreased, informality increased, has immigration increased, brain drain? So again, you talked about some of those excellent like macro factors, right? Interest rates. I think, yeah, this is a great question, and that do get kind of at those more micro, how it's hit the everyday person.
Yeah, so I do get at that to some degree. I mean, there was a massive brain drain, both, people fleeing right after the invasion and then fleeing again after Putin ordered this September 2022 mobilization. And I think most counts are about 1 million Russians left the country. And a lot of them were very skilled, often in the technology industry. And so that has contributed to the labor shortage. There's, Russian unemployment is at record low because they're spending so much on defense production, and they're throwing money at Russians to sign up to fight in Ukraine. I mean, in July, Putin doubled bonuses for people who signed up, and the average wage of a Russian soldier is like 3-4 times, what the average salary in Russia is. So, you've seen basically that inflation has been high, but it's partly because Putin has handed out money to keep the population supportive and tied into the war. The wages at defense enterprises have gone up something like 20 to 60%, depending on where you look. So I think there's been pain felt by, say, pensioners because spending on social care has gone down relative to spending on the war. So I think that has been a factor. That the casualty rate from this war is just staggering. I mean, the latest estimates, it's mostly comes from the Ukrainians, but Western officials seem to think it's a fairly accurate figure, is 800,000 casualties in Russia, which is just, it's hard, it boggles the mind. So, but more recently, I think Putin has been forced to withdraw some of those subsidies, for the population. There were subsidized mortgages until I think last summer. That contributed to a construction boom. At the moment, you haven't seen the kind of pain that you see from sanctions previously, apart from inflation for like key goods, food and the like, kind of impacting people on the lower end of the income scale.
Oh, great. Excellent. Another question that touches on, kind of a more broad question. This comes from Marilyn Young. Why did the US not go after the countries that were helping Russia evade the sanctions? So again, you talked a little about China and India and others, so.
Yeah, I mean, there was and I tried to get at that and recount some of the warnings in the book that there were efforts by U.S. officials and EU officials to go to places like Central Asia, the UAE, to sort of say, you must please follow our sanctions, otherwise you could be subject to sanctions, or your companies could be subject to sanctions. And I think there was, in Central Asia, that was, met with a degree of frustration because I think they did follow some sanctions at a considerable cost because their economies are so tightly tied to Russia. But obviously, there were huge evasion networks that ran through their countries that enabled Russia to continue operating in a relatively normal way. And I think there was a reluctance to impose blanket sanctions against, say a Central Asian country like, Kazakhstan, for instance, because, they're trying to, play this delicate balancing act to keep them on side. And I think one of the things I do get at in the book is that there is not enough, there hasn't been enough positive inducements to some of these countries to follow the U.S. sanctions. They need, concrete opportunities and offers from the US in a way that China has done through its Belt and Road Initiative. And I think that was one of the comments that a Kyrgyz official made was that, China has Belt and Road, they give us, contracts, and the US has what? They just lecture us, basically. So I think that is a difficult one. I think there's a considerable amount of frustration in places like Turkey and the UAE, which have sensitive security arrangements with the US that they can't really go after them in a really hard way because there are other considerations at hand. It's a very important topic, and I think they could have used secondary sanctions more forcefully. But again, I think there was concern that there would be blowback and it would, cause people to move away from the US dollar, which, you're seeing to some degree. I think that is perhaps there's too much emphasis on that threat of de-dollarization.
Can I just jump in really quickly to add a couple of quick points? I think that when it comes to sanctions evasion, that's certainly something that the Biden administration was extremely focused on. And we had access to some very good data showing trade routes and how goods were moving and shifting the shifting patterns of trade that were allowing goods to move into Russia. And one of the challenges that we found, particularly in the Central Asian states, is the capacity for some of these states to actually monitor and disrupt trade in goods, sometimes also financial flows, was sometimes limited by both experience, technology, and personnel. There's people on the ground and their ability to actually do the physical monitoring that it does take in order to disrupt or prevent certain types of goods from traveling into Russia. The Commerce Department in particular, but also U.S. Treasury and the State Department worked very closely with many of the governments in the region and in other parts of the world as well to help them sort of build out their capacity to disrupt this flow and be more aware of some of the typologies that we have seen for these types of goods, in particular goods flows, to get across the border. Very far from a perfect system, and I would never claim that anywhere near 100% success. But I think there were some real improvements made over the course of the last several years, both in our ability to communicate and share information with some of our Central Asian counterparts, as well as their ability to disrupt some of the trade that we saw. And so you've seen those trade flows becoming more and more, what's the right word, convoluted, which increases costs and makes it more difficult and more expensive for Russia to get some of the different things that it needs. Again, far from perfect success, but every time the cost is raised, I think it's a helpful step in undermining Russia's ability to devote money and resources to its war effort.
No, that was an excellent add on, Jim. And we have so many great questions from the audience. I know we're at time, but we're going to take just two questions. So maybe Stephanie, just quick responses to them, just because again we've got such excellent questions coming in. So the first one I want to ask from Sir John Scarlett: do you see any sign that Putin is prepared to enter serious negotiations? I'm assuming building on the idea, are the sanctions somehow like inducing an enter into serious negotiations?
I guess it depends on how you define serious. I mean, I'm quite skeptical that anything is going to get done in the next 6 months. I think the gap between where Russia's at and where Ukraine is at is so wide. You know, what Putin has outlined, neutrality for Ukraine, limits on its military forces. Russia has annexed more territory than it actually controls on the ground. The latest is he's talking about there needs to be elections in Ukraine. I mean, all those issues for Ukraine is a non-starter. Setting aside the whole fact that as part of any agreement, will there be a international peacekeeping force? How do you police 1,000-kilometer front line effectively? Especially without U.S. involvement, even just U.S. involvement in terms of logistics and satellite, et cetera, I think that's going to be just almost impossible. So I worry that we'll get to a point and Putin will try to blame Ukraine for the failure of any negotiations. It's very hard to get into the mind of Putin or Trump at this point, so I wouldn't want to make any hard predictions. But I do see the sort of the two sides are very, very far apart, and I don't see anyone who's got the diplomatic skills to try to finagle what is probably one of the most complicated agreements that we'll see in at least in my living memory. I mean, it's along the lines of the difficulty of the war in Bosnia.
No, excellent.
Mhm.
Final question we'll take, and actually similar to the question I was going to ask you when I was noting down. So a question from one of our audience members, Craig Jones, about what did you change your mind in the course of writing this book? So that's the audience members' questions. My question for you was going to be, do you come out of all this research and writing? Is there something that in your mind where you're like, if I was writing a sequel, right, or a follow-on book, this is what I would want to follow, based on having learned all of this about sanctions. So anything that you changed your mind about in the course or that you would want to pursue moving forward?
Um, I think I was on the fence about the whole question of the US dollar and how it was affecting the US dollar. And I came out just really believing that, no, I think the dollar is safe for the time being. And that we worry too much about de-dollarization. There's too much of an emphasis on that. I went into it with a kind of open mind about how effective the sanctions were. I think and I ended up settling on, well, they were effective in one sense. On the one hand, they clearly did not drive Russian troops out of Ukraine. So in that sense, they've definitely failed. But if you look at it on another measure, they did cost the Russian economy hundreds of billions of dollars. They were hugely consequential. And so when people say that the sanctions have failed, I think that's the wrong way of looking at it. And I don't think you can expect sanctions on their own to bring about the end of a war as monumental as this. So I wouldn't say I changed my mind, but my mind crystallized in the process of writing the book and really understanding the impact on the Russian economy. But that it's going to be the alliance of Russia and China is a massive challenge, I think, for the U.S. in particular about how do you drive a wedge between that alliance, because it's quite a powerful one economically. And I'm not so sure how that one is going to pan out.
Thank you. We are unfortunately at time. Again, I wish we could continue the conversation. I want to thank very much our two guests today. Jim Mullinex, who comes with extensive background looking at sanctions, and Stephanie Baker, the author of today's book that was the basis of the discussion. Again, the title of her book is Punishing Putin: Inside the Global Economic War to Bring Down Russia. So thank you to our guests. Thank you to our audience members for excellent questions. I'm sorry we weren't able to get to all of them, but we look forward to seeing everyone at our next event. Thank you.
Thank you very much.